Hello everyone and welcome to ICM's midday session. Today we're seeing the dollar retreating and falling as treasury yields there just in the flattish mode. We had a couple of economic indicators which were also supportive to risk sentiment in the morning. Among them, the ZEW economic sentiment, the German economic sentiment, which rose to 61.8, beating expectations of 60 and better than the previous reading of 55. Also the eurozone ZEW sentiment rose to 58.3 versus 54.4. So mainly these are just sending some messages that investors are optimistic over the short run. And also the consumer price index from Germany rose by 0.5% versus a drop of 0.8% in November. This is also a positive reading for the risk on sentiment. In terms of market price, we're seeing the euro dollar rebounding to 121.33 after falling to 121.60 earlier. Last week we highlighted this key area as a major support, and was previously one of the previous bottoms, 120.50 almost, and the euro dollar bounced from this zone. How what we can do to just highlight where the market could be going, there's symmetrical tops. If you can just draw this trend line here that just joins the recent tops, you can see that the market is currently breaking above it. If you want to go for further expectations where the market could go, and this is what we were usually doing, just drawing a line combining the bottom and then just highlighting this parallel line or opposite line to just set some expectations, we could be rising towards almost 120.160, which is the 200-hour exponential moving average also. So this could be the next possible resistance ahead of the previous top of 122.20. So these are the two key levels to watch out if you are long on the euro dollar, while any fall back below 121 is just bearish again, and we could be retesting 120.50 and then drop below 120. The British pound against the United States dollar, we're also trading sideways. You can see that the market's not doing much on the it's still on the bigger picture capped at 137. We were able to go for higher highs, posting a higher low, posting 35.22, higher than the previous low of almost 34.50. So this is a possible. These are the possible levels on any drawback. While in order to just continue higher, we need to clear above 136.20, which 136.20.30, which was previously here the almost the support zone for this double top formation that sent the British pound against the dollar tumbling. So moving back above 36.30 could just turn bullish again, and we could be rising back towards an interim top of 36.70 and then 137.10. The US dollar against the Japanese yen, also we're trading still sideways, still this pattern here it's holding. You can just draw this trend line combining these bottoms. Also there's a trend line combining these tops, almost where just closer you can just go for another trend line. But the medium or the general picture is that we're stuck in this sideways trading between 103.50 almost and 104.40, awaiting some fresh drivers. The dollar against the Swiss franc, also same formation, just a little bit of a rebound. 89.20 level held again, so you can see this level is just reminding us that it's a very good or important level for sellers, and it is still holding. On the smaller picture, you can just highlight these two key areas between 88.50 and 89.20 for possible breakout out of this zone. On the bigger picture also, if you can just notice, we have a possible inverted head and shoulder formation. However, on a drop below 88.50, this could just be no valid, and then the market could be falling below 88 again. The Australian dollar against the United States dollar, also a little bit of a pullback, but still the 76.60 area almost held. So this area here is acting as key support for traders, and we're currently almost near the 100 and 200-hour exponential moving average. Moving above them could just trigger a further inclination towards 77.40, and then we could continue towards 78 zone and above. The New Zealand dollar against the United States dollar was a bit weaker. This week we have the CPI, a consumer price index from New Zealand, so this could put some pressure on the currency if we witness some drop in inflation. However, as long as we're below this trend line, we could be poised to further downside, maybe retesting again the 70 psychological level. On any rebound or move back above this the previous support area of 71.40, 71.70, so you can highlight this range here between 71.40, 71.70 as a key resistance area. Moving back above it could just turn bullish again for the pair. The US dollar against Canadian dollar is still on the bigger picture. Last week we highlighted this flattish mode that could be happening, 126.26, and then the previous top of 28.20, 28.30. So this is the sideways trading that's taking place ahead of the Bank of Canada interest rate decision. So we could be remaining inside this range until we have key drivers for the Canadian dollar. Gold prices, after falling yesterday towards 1800, we're just back and moving a little bit higher. The 100-hour exponential moving average is capping these gains. You can just draw a trend line combining these previous tops, which could coincide with the 200-hour exponential moving average. So breaking above today's high, or 1845, could just drive prices higher towards 1857 and then 1862. However, if we just break back again below 1830, this could just turn bearish again, and we could be paying a visit again to 1800. Silver prices similar to what gold has faced, but still a little bit stronger, trading near the 100 and 200-hour exponential moving average. So a key level remains 25.86. As long as we're trading below it, we could be poised for further downside. Moving back above 25.86, 26 level could just open the way towards further appreciation in silver prices. The WTI, following this double top formation that we highlighted last week, the market printed this double top, the target, and then had some support at the 200-hour exponential moving average. Now we're trading sideways, almost between the bottom and the previous top of 52.75. So this is the range that we're currently trading in until we have some better vision on what could happen to the demand in Asia. On prospects of falling demand, the prices could have some pressure. If we have a bit of more positive risk sentiment in the market, we could be visiting again 53.80, driving the stimulus package. Yellen's speech could just drive risk on sentiment, and this could turn positive for oil. The Dow Jones, following last week's drop, was able to recover a little bit, and then the market is moving towards 31,000 again. So we're back to the same logic. On the bigger picture, we're just stuck between 31,200 and 30,600. So this is the range that we are currently trading in for a while, and we could be continue trading it for the next couple of sessions. We have a couple of earnings coming out this week, so this could just weigh on a couple of stocks that could move, have a certain direction, and could weigh on indices performance. So this is all for today's session. I'd just like to remind you that all the information, news, analysis, and opinion mentioned in this session, they're only for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument, and ICM doesn't provide any investment advice. This is all for now. Thank you all for joining.